This is Satya Pradyuman of Cirrus Research. I want to call your attention to the latest report from Cirrus, the briefing, which is a monthly review of market performance. The title for this month is Inflation-Recession Tightrope Snaps Tighter. And this harks back to the call that we made in our recent quarterly outlook, the dispatch, where we argue that the profit cycle is indeed peaking, and as a result, we have to focus on slower growth and quality. At the same time, the Fed is also fighting a massive inflationary jump, and as a result, you've got this sort of two-headed barbell posture that you're forced to work with. And in the most recent period, we've come out of effectively a recession trade where the 10-year had rallied. We had a lot of growth stocks rebound. And then comes along August and we get this massive, really inflation correction. The Fed, in fact, does reiterate their need to continue to act. As a result, we had a massive pullback in growth stocks and their rebound. Three key points I want to flag in this report. One, we do believe that the barbell posture is the way to frame this environment. It is awfully confusing out there, but a few things we can grab onto. One, the Fed needs to continue to draw down liquidity. And two, we are indeed at the peak of a profit cycle that's rolling over. So those things basically tell you focus on quality and look to valuation sensitivity. That seems also to be working. Importantly, huge divergence has opened up between smaller cap growth, large cap growth. We focused on this a few months ago. The numbers are dramatic, though, and I'll go through that in a moment. And then finally, the market sentiment definitely shifted mid-August, but what's interesting is that risk assets still seem to matter, and I'm going to try to tie that together here. And this cover chart, I think, does a great job. What you're looking at is a single line performance between small cap growth and large cap growth. I think this is the sort of like the really the thick of the market right now, which is the downward spiral in the performance of growth stocks. Small cap growth over the large occurred in the last couple of years. And this is really what's put the small cap market and small growth at a very comfortable, favorable valuation disposition. As a result, take August as an example, and in fact, since May, we've seen smaller cap growth outperform large growth by about 9%. Now, granted, this is all, maybe another way to word it is that small cap growth has lost less ground, but at the heart of it is something else seems to be happening, which is some sort of bottom appears to be forming around the broader sampling of stocks in the U.S., potentially a good thing. However, what this chart also implies is that there's still a ton of emotional ties to large cap growth leadership, and that is much slower to unwind. So as the Fed continues to make their moves here, we think this sort of zigzag sort of trade pattern will likely remain. Again, the report is the briefing. Take a look at it. Always happy to take questions, and thank you.